Welcome back. You're still watching Business Morning live on Channels Television. Well, for our first conversation now, for the second consecutive quarter, the manufacturing sector's real GDP grew by 3.49% year on year, the second quarter of 2021. And that's the highest growth since the first quarter of 2015. So this can largely be attributed to the low base in prior year. Recently, the Nigeria Investment Promotion Commission reported $8.41 billion new investment announcements in Nigeria in the first quarter of 2021, with the manufacturing sector attracting about 60% of that. Well, I'll be discussing the drivers and issues arising in the sector with Mr. George Onofowokan, MD, CEO, Coleman Wires and Cable. Great to have you on the program this morning.
Thank you for
Happy
having
Monday.
me. Happy Monday to you too.
Well, it's 2021. You know, year after the pandemic, the world has been disrupted by the pandemic and other, global issues arising from shortages and all of that. How would you describe the performance of the, manufacturing sector in Nigeria, post, the COVID year?
I think the performance has been, for my own view, coming out right. We had to have an optimistic look for 2021, being on the fact that we had a dull pre-COVID and post-COVID, late 2020 was not looking as realistic as coming out of post-COVID as we all thought it was. So everybody's expectation was looking at 2021. And if you look at everybody's year-on-year in growth, everybody expected a rebound in 2021, and we're all seeing that rebound. And the manufacturing sector has benefited, I think, a lot more than expected from the post-COVID era. And it's normal because you had a very, very negative position of manufacturing, and demand levels was very low in 2020. And for 2021, the demand levels was expected to more like be far than expected, and that has been seen all over the world, not only in Nigeria. And with that, we've already seen this expected logistics and pricing, supply chain issues that's happened everywhere in the world, because at the same time, we're all having the same demand levels all at the same time. And the manufacturing sector is benefiting a lot from that.
Yeah, but what about, had these challenges with, raw materials and access to credit? How would you describe, policies by the government and central bank regarding, credit, accessing credit for manufacturers?
I think one of the benefits that we've all seen that has impacted positively on manufacturing or investment within Nigeria has been the policies, especially from the CBN side. If you look at the aggressive, I'll say more like aggressive and deliberate lending, which when you look at the loan-to-deposit ratio of the banking sector, which has forced every bank in Nigeria, if you look at the growth rate of liabilities of banks and asset creation, we've seen that the banks have actually been lending a lot more because the CBN has actually been penalizing a lot of banks on LDR. Right. And that has seen more funding coming into the system. We had a negative position, actually, when you look at the issue with regards to debt raising, debt capital. The debt capital market, because of the rising interest rate from Treasury bills and the rest of the long-term debt capital market, in the first two quarters was not that brilliant. But I think now the market, everybody, in this last quarter, we should see a rebound in that. So with the lending going into the sector, a deliberate policy to actually put lending out, I think that lending has gone more into the manufacturing sector, and the manufacturing sector has benefited a lot from that. And I think the country is beginning to see the benefit of it. And if I look at it from our own perspective, if I look at it from my own perspective today, if I look at that, we've seen more support for the industry. I'll see more support from the industry for Coleman, for instance, and that has seen more growth and more investment. If you look at the number of investment we're tailing out now, you're seeing a lot more aggressive investment going in. We're doing a lot more fiber optic now that we're doing. We should be up in that first quarter of next year. And there's so many investments coming into play. We're pushing in over $50 million of investment. So if you look at the statistics of everybody's investment flow, it's actually getting a lot better in the manufacturing sector. And that is why we're seeing those informations coming out. Right?
And obviously the NIPC, stated that manufacturing industry had got the more attention when it comes to investment announcements. What does that tell us at this point?
It tells us that if we continue to focus our investment in country, and I think for me, when I looked at the NIPC investment with 7.8 billion, 7.29 billion, I think the critical part of that NIPC is to look at what the domestic investment is. It accounts for 42% of the actual investment.
Quite big.
And that itself for manufacturing, with majority of it coming from domestic investment, not foreign direct investment. And that is where we should actually see the growth coming from. Domestic investment will continue to grow rapidly because of these direct, deliberate policies towards local investment, localized investment, as in companies based in here. It doesn't matter whether you're Nigerian or foreign. It's actually companies that actually, so they're having more access to funds. The only problem, of course, it dims a fit where no matter how there's still a glut and there's still a problem with the issue of FX raising. But I think generally they're beginning to rebalance itself. I think once we start seeing a Naira rebalancing or a Naira equilibrium between the black market, the foreign market, and the INE and the SME and all the windows, I think that will stabilize itself. But most importantly, you're actually seeing domestic lending and domestic companies actually getting the lending and now interested in actually pushing investment in that industry. And you have to remember, Nigeria has 200 million people. No matter how you look at it, we need to actually generate investment. The risk appetite for Nigerian business is actually dwindling. So we might be looked at sometimes as high risk, but I think the risk appetite for investment in Nigeria is a lot better now.
Okay, so but should we be worried, that, domestic investors are the ones, pushing more at this time, and we're having less foreign direct investment. Looking at this, should we be worried at this point?
I think we should be pleased. Being worried, I think it's a negative way of looking at it. I would rather that Nigeria has more domestic investment than actually foreign. Now, why I drive at that is that you have to look at it from a different perspective. Now, foreign investment is fantastic. But where does foreign investment go in Nigeria most of the time? It's services, telecoms, stock markets, debt market, and treasury bonds and money market. Now, when it comes to manufacturing, it's not as high. So we cannot, and the reality is, who drives your economy? Now, there's nobody on the long term that could drive your economy as much as your indigents themselves or domestic investors. The way we would plan succession planning, for instance, on a long-term basis for a domestic investor is very different. You'll be looking at second, third generation succession planning. Now, for a critical fact of it is that foreign direct investment in manufacturing, sometimes, especially when it privately run investment, don't last as long. I've had a case of a Chinese company saying to me that they've made a very sizable investment. If I look at their investment in Nigeria, it's been between $10 to $20 million. But the fact of the matter is, the statement from the gentleman was that, look, my business in Nigeria is 10 to 15 years, at which I would exit. I would sell off the business because I don't expect my children to actually come and sit in Nigeria. Now, so how do you want to drive investment into manufacturing sector if we're going to be looking at foreign investment when you have examples like that? We're not saying we don't have foreign investment for multinationals that have more long-term view, because those companies are older, they're well-structured, they can actually stay the test of time and stand the test of time. But for domestic investment, I think it's key that we actually look at how we support domestic investment to create long-term solutions for our own businesses in Nigeria.
And what do you think can be done to, encourage more domestic, investment at this time?
I think the word is always the word deliberate. As in deliberate in the sense that we need to find businesses within Nigeria that have sustainability, they have that can impact the country or impact investment in the right way, and deliberately invest into them. Okay. And in terms of government policies, either get towards getting them interest from development banks, which we have, and focus on those sectors the same way we've done with the agri sector and sunsetting industry. some certain industries. We need to continue to focus on those policies. Now, you have the 100 for 100 from CBN. I would expect those things to be focused, which from what it is focused on domestic investment to generate and actually remove ourselves from dependency on imports, creating employment. So if you look at the criteria on the 100 for 100, for instance, those are the things that we need to see. And those are the type of policies. But it should not only be just dependent on CBN pushing every policy, for God's sake. And I think we need to look at all the executive orders and actually make sure that they're being impacted. Because you cannot say local content or local purchase in executive orders. And in reality, it's just hearsay. When you look at some of the tenders, they get towards foreign companies. And if you look at some of the tenders that get towards foreign companies, it doesn't make sense because some of those products are widely available in Nigeria. And if I have to put out a company like TCN, for instance, TCN does not participate in local content. And it's sad to say, they can show us how many companies have been local in their history that they've done business with locally. And you have cable manufacturers all over Nigeria in the last 60 years. And you look at their statistics, it's very poor. So you have government agencies that have very poor local content development. And that is what we need to, that would evolve and increase capacity in local content. If businesses see opportunities, more investment will follow.
Right. Okay, looking at the NIPC report, we see that Ogun State and Lagos got a huge chunk, when it comes to the investment announcement here. What do you think other states should be doing to actually, attract them? Why is Ogun State getting so much attention?
Ogun State as a state has been a very, very, I'll say, too well positioned. If you look at it, if you take Lagos, for instance, Lagos has the port, has all the infrastructure, but its land is too expensive. But they will get investment in. If you look at, I'll say, most of the telecom and the service sector investment go to Lagos State. Nobody can argue with that because they're well placed where they are. But when you look at the industries, a lot of the industries are now moving outskirts. So Lagos, the one time I was in opportunity to be at one of the events of Lagos State and I spoke and luckily spoke with the governor was there and I said, Lagos, let's accept Lagos is our New York. It's going to be our finance center. It's going to be our telecom center. It's going to be our hybrid center. Ogun State is going to be our New Jersey. It's going to be our industrial zone. We have to just accept certain areas will be focused on certain things. So because of the proximity, the availability of land is better in Ogun State. The proximity to Lagos and the port is there. The gateway to the other states is there. So technically, Ogun State is so well positioned. So it has a lot of advantage. Statistically, over the last 10, 15 years, Ogun State has benefited from a lot of industries opening up factory and setting up shops in the state. Other states can benefit. And I don't see it. We have states like Rivers State, I believe, is also getting a lot of benefit from it. And you have some of the Southeast states and some of the few northern states. Now, but the fact is that not many states out of 36, I think the figure here shows is mainly 8 states that have benefited from it. But we can get other states to benefit. It is not that difficult to have investment in your state. The problem with investment in most states is that it is not seen to be viable unless those states are also deliberately looking for those investments. You need to make access to investment easy. Taking, for instance, simple things like telecom, for instance. Telecom now, data has become a critical part of telecom. Data flow now today, data transmission is by fiber optics. Until Coleman is putting this fiber optic cable plant in Nigeria, there's not. Now, we are putting in over almost 300, 400,000 kilometers of fiber, multi-fiber kilometers a year. Now, but that solution, when I looked at it today, is not even going to solve our problem. Because why? Access through the states. If you look at Lagos, fiber access is getting a lot better. If you look at Abuja, it's not too bad. Some of the states. But we need to create investment-friendly zones whereby this thing will come in. And that's what I say.
All right. So, these are the announcements. We'll be watching to, track how they actually materialize moving forward. Mr. George Onofoweko, CEO, MD, Coleman Wires and Cable. Thank you for joining me
Thank you,
on the
Laddie.
program this morning.
Thank you very much for having me.